por el trabajo.
Leo.
Primer paso. Imposible o invite. Dicen que la suerte es un feliz imprevisto. Pero el trabajo no es suerte. Y la constancia no es imprevisible. Si las cosas buenas les llegan a quienes desean, entonces las grandes hazañas le llegan a quienes entrenan diariamente, que hacen que valga la pena. Poco a poco, acercándose al objetivo, ningún progreso es demasiado pequeño. La persistencia premia. Con trabajo y perseverancia se hace campeones. Hacer que valga.
BitGet believes incremental improvements are the only secret to success. Creating smarter crypto solutions for everyone. Progress, no matter how small, is valuable. It builds upon itself. Make it count.
邁向10年發展 ，Topus 由最初照顧 Single Family Office (SFO) 到今日嘅 Multi Family Office (MFO)，一直以嚟，我哋都為家族辦公室客戶、高淨值嘅私人同埋機構客戶提供全方位嘅財富管理、風險管理以及家族傳承等等嘅服務，致力保障家族財富，同時亦做到財富增值同財富傳承。
Topus 由創立到而家嘅定位一直非常清晰，我哋係以家族資產嘅長期利益同埋發展作為終極使命。Topus 嘅家辦服務團隊包括律師、會計師、投資經理同埋升學顧問，提供稅務規劃、家族信託、遺產規劃、家庭成員嘅保障以及子女升學嘅發展。
Topus 嘅成功主要基於兩大元素。第一，我哋根據客戶嘅需求，提供量身訂造嘅投資組合。投資管理服務涉獵1級同2級市場投資，包括私募股權、固定收益、對沖基金、環球證券同埋期貨等嘅領域。
Topus 作為香港家族辦公室嘅前線，我哋好榮幸成為 Family Office Association Hong Kong (FOAHK) 嘅聯合創始委員。
This year, almost every industry chose blockchain technology to reshape the digital economy in 2020 and beyond. Weaving blockchain into the fabric of your business currently comes with a lot of headaches and a massive price tag. Most businesses soon find out that most blockchain applications are hard to implement, expensive to maintain, and difficult to use. Your business needs a simple, surefire way to unlock the technological and financial benefits of blockchain. Say hi to FIO. FIO democratizes blockchain use for conventional enterprises of any size. We flatten blockchain's steep learning curve and technical investment to help you pay only for what you need. FIO was made for non-technical users like your employees. Just connect your data via our API or even a spreadsheet. Our back-end system is so intuitive and simple to configure. FIO helps you manage and cash in on diverse fields such as AR financing, payment processing, intellectual property rights, loyalty points, rating systems, and the provenance of high-value goods. Our affordable subscription, starting from only a few dollars a month. Use our flexible, customized pay-as-you-go options to scale as you grow. Start the new decade with 2020 vision and a head start over your competition. FIO helps you unlock new opportunities with blockchain fast, cost-effectively, and as simple as possible. FIO, giving your business the building blocks for tomorrow, today.
Hello, good afternoon, ladies and gentlemen. Welcome to the final round of the Algo Trading Challenge 2023-24. I'm Jackson from InvestTalk, and I will be your host today. First, I would like to thank everyone for taking time out of your busy schedules to join us today. We are excited to have all of you participate in our Algo Trading Challenge 23-24, sponsored by BitGet and co-organized by Algo Challenge Association, Algo Board Limited, Algo Gene Fintech Company Limited, Finbot Limited, and quant. Now, let me introduce the judges for today's competition. Mr. Kelvin Choi, the co-founder and quant trader of HKPTRC. Mr. Doug Hee Han, CEO at Quant. Dr. Philip Leung, Senior Lecturer, CUHK, Center of Financial Engineering. Mr. Ethan Lai, Global Technology Strategist, Microsoft. Professor SMU, Associate Head of Department of Computer Science, HKU. Mr. Wallace Cheung, Executive Director, CFA Hong Kong. On behalf of the organizing team, we would like to congratulate for all finalists entry into the final round. To begin this event, we would like to invite our co-founder and chairman of Algo Challenge Association, Mr. Rex Zheng, to give a speech. Mr. Zheng, please.
Thank you, Jackson. Ladies and gentlemen, distinguished guests and judges, and our contestants, welcome to our final day of Algo Trading Challenge 2023-24. It's with great pleasure and excitement that we gather here together and witness our contestants' hard work, innovation, and dedication in the field of algo trading. Today, our contest has two streams. One is Korean equity market, which is supported by the Korean government KSGC program under NIPERS. And the second stream is crypto market, which is sponsored by BitGet. I would like to say thank you to our supporting organization, including Invest Hong Kong, CFA Society Hong Kong, S3, IFTA, HKAI Lab, HKUST Entrepreneurship Center, FinTech at HKBU, Topaz Family Office, FIMA from Dubai, Kiwi Tech, and Invest Talk. I would like to say thank you to our co-organizers, including Quantits from Korea, Algogene, Algobot, and our sponsors, FinBot, Theo from Taiwan, Trading Plaque from Singapore. Because of all your support, Algo Challenge Association can successfully organize this contest. We had over 500 participants this time. Every contestant had taken up the challenge to test their skills and knowledge in the dynamic and competitive Korean equity market and crypto market. Their passion for algo trading and their commitment to pushing the technology boundaries is truly encouraging. Today, we have 12 teams shortlisted to compete for the best return, best Sharpe, and best strategy design. To all the contestants, I would like to say you are the architects of the future, the pioneers of innovation, and the drivers of change. Your participation in this contest is not just a test of your abilities, but a testament to your courage and determination to excel in the field of algo trading. As you navigate through the challenges of algo trading, remember that every line of code, every strategy you develop, and every decision made brings you one step closer to success. Embrace the journey, learn from each experience, and never lose sight of your ultimate goal. I extend my warmest wishes to all the contestants. May your journey to be filled with excitement, discovery, and success. Let the trading contest begin. Thank you.
Thank you, Mr. Zheng, for the speech. Now, may I invite all the guests, sponsors, organizers, and students to open your camera because we are now here on Zoom. We want to take a group photo together to celebrate the final day of the Algo Challenge Association 24-23-24. Please open your camera and have a smile together, and we will have a good group photo by our technician. Please smile. Please smile. Yes, keep smile. Please open your camera. Yes, all our participants, our students, or our organizers. Smile, keep smile. Yes, still waiting some, open your camera. Oh, so many people here today. It's a very, very good day. Keep smile. Okay. Keep smile. Our technician work hard to take a Zoom photo. Okay, thanks all. your smile. And now we are moving to the finalist presentation. Maybe some of you can close your camera first. Now, moving to the finalist presentation, there will be 12 teams today in total, 6 on the career equity stream and 6 on the crypto stream. Each team has 4 minutes presentation and 2 minutes Q&A section. We will notify the team when your presentations has 30 seconds left. Now, let me introduce the first team. Alpha Omega Capital from Indonesia. The team leverage KOSPI high-frequency data and utilize the mean reverting tendency of the stock pair spread to exploit the short-term deviation of the pair to secure profit. Alpha Omega Capital, please unmute yourself and share the screen and prepare to start your presentation. Okay, are you ready? Please unmute your mic, yes. If you're ready, you have 4 minutes to present and you may start now.
Thank you. Want to know how to get a more than 25% return in just 2 months? Stick with us as we Alpha Omega Capital present to you our pairs trading strategy. Sorry. As a brief introduction, we are year 1 and year 2 HKU students from a finance and computer science background with experiences in equity research, VC, and deep learning. Our strategy leverages mean reversion. When spreads between 2 stocks are beyond a certain threshold, there is a high chance that it will revert to its mean value, presenting opportunities for trades. This is effective in the short term where inefficiencies are temporary and deviations occur more frequently. We believe that cost-P stocks are suitable for our strategy because it is dynamic, liquid, and high-frequency data is made available. We approach the strategy by first calculating the mean spread of all potential pairs of stocks, then selecting which stocks are the best through the Engel-Granger test, filtering them based on liquidity, and finally determining thresholds for entry and exits.
We begin our analysis by evaluating the instruments we will be using. Engel-Granger co-integration task is used to determine if this instrument moves together in the long run. We use data from 2018 to 2022. As you can observe from the graph on the left, it demonstrates stationarity as it consistently converges towards the mean and remains stable. However, the graph on the right exhibits the different pattern, indicating a lack of stationarity. After identifying the top 10 pairs with the strongest co-integration values, we perform the OLS regression to calculate the spread data, including the mean, standard deviation, and beta coefficient. This spread data serves as the initial parameter for our algorithm. In our algorithm, we have also defined the specific entry and exit points. We take long or short position when the spread Z value is in between 0.9 to 1.1 or minus 1.1 to minus 0.9. And we close the position when it reverts toward the mean or when it reaches beyond 1.2 or below minus 1.2. And we realized that the market comes with its uncertainty and potential losses. So for us, effective risk and capital management is crucial for optimizing our trading performance. The first thing is our stop-loss strategy, which is designed to monitor the real-time market by leveraging Z-score analysis with a 1-minute interval. And it is our shield against potential losses. Now, let's talk about optimization. Our journey led us to pair trading, where we also experimented with different entry and exit thresholds. Next, we were doing extensive backtesting spanning from 2018 to 2022. And from hundreds of simulations, we got countless of insights for improvement. And while algorithms drive our trading strategies, there might be external factors and anomalies, and monitoring help us to catch and address any ongoing errors. And this is our backtest result from 2019, where we utilized the spread from 1 year prior. And for our live trading performance, we use data from 5 years prior to get more than 27% of PNL.
Through our backtesting, we realized that we have 4 major improvements that we can do. 2 are related to the nature of our strategy, and the other 2 are related to our strategy design. The first that we realized our statistical threshold are using static data. We realized that we can improve it by using the dynamic data similar to the concept of moving average. And we realized that the volatility of different stocks are different, so we can use the minimum variance to similar to the dynamic hedging. That's all for our presentation. Now we are open to the Q&A session.
Thank you. Now is entering the Q&A section. Judges, you may begin if you have any question to the team Alpha Omega Capital.
Excuse me, may I ask a question?
Sure.
Yeah. For in your trading strategy, you need to decide the entry and exit point. Okay, what's the rationale for you to set up this entry and exit point in your trading strategy?
First of all, thank you for your question. So the way that we determine the threshold for the entry exit is by doing some trial and error. So after we did some trial and error, we know that using our threshold, which is at the +1 or -1 standard deviation as the entry, is the most optimal so far.
I see.
Any other question?
Yes, this is Kelvin. I saw in your backtest and live data at that page, I saw that the transaction cost is you set to be 0. Why didn't you count in the transaction cost?
During our back testing and the live trade, we haven't put into account the trading fee because we just want to know the pure profit and loss from our strategy. But it turns out in some back testing that we put the trading fee, it still give a good result.
So after counting in the transaction cost, what is the Sharpe ratio or other trading metrics?
As currently, I'm not holding the data, but I can tell you that our trading, its profit from our its trade still exceeds the trading fee.
Okay, thank you.
Any judges have any questions for the team?
Hi, this is Wallace from CFA Society. Thanks for presentations. Quick question. You mentioned you have done the backtesting throughout the period 2018 to 2022, right? Will the result be the same if you lengthen or shorten the period that you have backtest? So from 2020 to 2022, will the performance be better or lower?
Thank you, Mr. Wallace, for your question. We know that from our backtesting, because we're using data from the year before, every year we're delivering a profit. But as we know that what we might do to improve the strategy in any time frame, what we can use is using a dynamic statistical threshold, similar to the concept of moving average.
Okay, thank you. Maybe the Q&A section for Alpha Omega Capital has ended. Judges, please write down your score for the team. And we thank you, Alpha Omega Capital. Next, the second team is Sigma Go from Hong Kong. The team applies statistical methods to test market direction for momentum trading. Sigma Go, please unmute yourself and share the screen. And when you're ready, you can start your presentation.
Good afternoon, judges, ladies and gentlemen. I present to you our team Sigma Go, comprised of Fei, Xin Chapming, and Wang Yin, representing CHK and Hong Kong U. Today, we will introduce our unique algo trading strategy, specifically designed for the Korean equity market. Our strategy has been designed to meet the context objectives of achieving a high Sharpe ratio and high returns. We aim to do this while being mindful of the high transaction cost and the short life trading duration of just 2 months. Furthermore, we are aware that Korean equity market is largely correlated with AI and EV firms and its venture firm, which may not be in favor for a mean reversion strategy. Our solution, a combination of Hearst method and next slide please, and moving average crossover techniques. Hearst is a statistical method that helps us identify whether a time series is more mean reverting, follow a random walk, or is trend following. With Hearst, we aim to capture unusually large movement in price trends and bet they will continue for stocks that have historically shown more autocorrelation. To determine the entry point, we use moving average crossover to identify if there is a new forming trend. For instance, if the short-term moving average crossover the long-term moving average. However, choosing the right set of moving averages can be tricky and can result in overfitting. To counter this, we use grid search for hyperparameter tuning, testing selected sets across multiple periods to find the most effective sets. In summary, our strategy is as follows. If the time series is confirmed to be trend following and a moving average crossover occurs, we go for long or short the stock depending on the breakthrough direction. If the time series does not behave as it is trend following, we don't open any position. If we already have a position, we'll immediately cut it into zero. Our backtesting results has been quite promising, with an annual Sharpe ratio of 3.11, an annual turnover ratio of 1,560%, and an annual volatility of around 40%, and a year-to-date return of around 34%. However, we acknowledge that our strategy does have some limitations. It currently does not cater to a situation where the time series is mean reverting or follows a random walk. To address this, we are considering the implementation of another rules for these Tuesdays. Thank you for your time. We are open to questions.
Okay, thank you. And now is a Q&A section. Judges, you may begin now. Any judges have the question for the team Sigma? Sigma Go?
Hi, this is Wallace from CFA Society. Thanks for Sigma Go presentations. Interesting. Since you're using moving average crossover, but if you talk to any market participant, right, sometimes we may face problem like false signal. That means that could be a crossover for one day, and then it may come back on. Then have you encountered such kind of situation to a filter to try to remove such kind of like false signals? Thank you.
Well, for this kind of situation, that's why we need first component for our analysis. Because if we use first for our analysis, we can know whether our time series is rather transferring. It's because the moving average part is only works for this. So we only do our transaction if this is transferring to avoid the problem you stay. Thank you.
Okay, any other questions for the Sigma Go team? Hello, any question? If no more question, the Q&A section for Sigma Go has ended. Judges, please write down your score. And also thank you, Sigma Go. Next. Yes, thank you. The third team is MSL from India. The team used a grid trading strategy which generate buy and sell signals in regular intervals above and below the current price. Profit will be generated when the price moves up and down frequently. MSL, please unmute yourself and share the screen. If you are okay, you can start your present.
Okay, good afternoon, ladies and gentlemen. It is my honor to be shortlisted to join the final day and give a presentation about my trading strategy. So in today's sharing, I will start with a brief introduction of my background, followed by my trading ideas and the risk and capital management. And finally, I will share the backtest and live test performance and further improvement of the strategy. So let me start with my background. So I'm Shah, and I'm a university student who pursue degrees of risk management and statistics. And during the competitions, I come up with a quite interesting trading idea, and I would call it as the non-parallel trading strategy. So you may ask what is mean by non-parallel trading. So simply speaking, it means that we could use different methods to open and close our trading position. And many previous study applied the same trading rules to open and close the trading positions, like using the momentum ideas to identify the time to open and close the position. And in other words, the trading rule is parallel. And however, the performance are not as good as expected. So therefore, I decided to modify this parallel setting by applying different trading rules to generate the open and closed position signal. And overall, I used the momentum ideas to generate buy or short sell signals and use the ATL indicator to stop loss in order to capture the frequent price movement. Like in particular, we buy or short sell the equities to open the position when the equity price go up or go down on a specific percentage. And to close the trading position, I applied the ATR indicator to stop loss. So it used the ATR to determine and update the stop loss limit when the time pass. This can catch up the abnormal price movement and generate a better order exit signal. And another important part for developing the strategy is the equity selection. Like different equities may have obvious difference return even if we use the same trading strategy. And in my strategy, I decided to trade on the Sinhan Financial Group. And next, I will talk about the risk in capital management. And I think risk is an important factor to be considered when we design a trading strategy. So I selected a financial company instead of other risky factor as the trade equity. And the annual Sharpe ratio is around 1.32, which is quite acceptable. And for the capital management, my initial capital is 1 million USD. And finally, let's move on to the most exciting part, the trading strategy performance. For the backtest performance, we can see that the cumulative P&L graph has an increasing trends overall, and the return and Sharpe ratios are 0.69 and 1.13 respectively. And for the live test performance, the accumulative P&L graph is a bit fluctuated, but still got a quite good increasing trend, and the returns and Sharpe ratios are 1.05 and 1.02 respectively, which get a better performance than the backtest case. And you may think like the return is very low, but this is because I just set the volume size to 100 only, and my initial capital is very large, which is 1 million. And if we increase the volume size, I believe that we will get a high return. And I would like to talk a little bit more about the further improvements of the strategy. But there are quite a lot of parameters involved in the trading strategy, including the multiples to calculate the stop loss limits, the number of period of ATL, and the percentage increase or decrease for determining the buy short sell signals to open the trading position. And however, due to the CPU limitation and time limitation, I didn't do a full search on the parameter and find the best one to maximize the returns and minimize the Sharpe ratios. Therefore, the strategy performance will improve if I spend more time to fine-tune the parameters. So this is the end of my sharings. If you have any questions, please feel free to ask me. Thank you.
Thank you. Now it's a Q&A section. Judges, you may begin.
Excuse me, I'm Philip from CUHK. Maybe let me ask you some simple question first. Okay, so in your trading strategy, you have the two different signals on opening and closing. Okay, but for the different combination of a signal, I think may affect your performance. But how do you determine the corresponding signals? Okay, used in opening and closing.
I think for the opening signals, so let me move back to. So in particular, it means that when we want to open the trading position, if we determine the price go up for a particular small percentage, like 1 to 2%, then we may buy the equities at the percentage, and if we saw that the price go down on a specific small percentage, and then we will then short sell the equities. Yeah. And for the closed positions, so basically we use the ATR indicator to determine the stop loss levels. Maybe I can provide more information about the ATR calculation.
Excuse me, maybe let me make my question more clear. Okay, ATR is one of the indicator used in trading. But of course, there are some other indicator can be used. Okay, but why you prefer ATR instead of the others?
Oh, okay. So I think because ADR is the indicator to measure the volatility, like we can focus on capturing different abnormal price movement in either direction. So I think it is a good indicator to capture those abnormal price movement, like maybe capture some reversal trend signals so that we can get a better order exit time.
Okay. Have you tried the other indicators instead of ATR?
Yeah, I have tried like another like those, as I mentioned before, like those parallel trading strategy use the momentum indicator to capture the ATLs. But I think ATL generates better results. Yeah.
Okay, I see. Okay, thank you.
Thank you. Thank you for your questions.
Any other question?
Hi, this
Yes.
is Wallace from CFA Society. Thanks, Michelle. Just follow up the previous question. So, like the case of ATR is for your sell signal, right? And then, so you try to understand today's high and low to generate the signal. Does it mean you're going to sell the next day at close?
Okay, I think to characterize that, our ATR is the indicator to close the position. Like it can be done with both buy or short sell to signals before. Yes, so that's the indicator to close the position. Like for example, if we set a stop loss level that's based on the current price plus or minus a multiples, and the multiple is 2 and times the ATL value that we calculate based on the formula, and then once the price we hit the stop loss level, and then we will just close the position. Like before, if we hold the equities, we will just sell it, and if we are like short sell the equity, and then we would just also use the ATL to close the trading position. Yeah.
Sorry, just to clarify, is it like the same day or you close the next day?
Yeah, next day.
Thank you.
Okay, thank you.
Okay, thank you. Maybe the Q&A section for MSL has ended. Judges, please write down your score. And also thank you for the presentation from MSL.
Okay, thank you.
Up next, the fourth team is newbies from Hong Kong. The team used a simple strategy based on the observation assumption that an MACD histogram peak could represent the actual price peak with delay in 1 to 2 unit time. Newbies, please unmute yourself and share your screen, and you can start your presentation when you are okay.
Yes. What? Hello. Hello, I'm Ken from the Newbies in Korean stream. So to start off, I would like to talk about our background first. So we are all year one students studying different degree at different universities, ranging from engineering, computer science, business, and law. So for our strategy, we make use of MACD to predict the momentum of the stock. Our trading strategy is very simple. We will take a long position when the subsequent difference is higher than the previous lowest. Vice versa, we would take a short position when the subsequent difference is lower than the previous highest. So we put 15% stop loss and we sell and buy when the next signal is received. For our stock selection, we avoid choosing stock that has extremely high or low volatility. So we shortlisted 047560 as our trading stock. As you can see from our backtest results, our strategy is quite successful in predicting the stock price. For example, in around 17th of January, we are able to capture the upward trend and took a long position. And at around 7th of February, we are able to capture the downward trend and took a short position. So from our backtest results with leverage of 10, so we are able to gain an annual return of 32.45% with win rate of 54.884%. Thank you.
Thank you for your presentation. Now, it's a Q&A section. Judges, you may begin. Any judges will have the question for the team's newbies?
Excuse me. I'm Philip from CUSK. So in your trading strategy, you try to avoid with a high volatility stock. Okay, why the high volatility stock make your trading strategy with the poor or with poor performance?
Yeah, thank you,
We
Felix.
try to, yeah.
Yeah, thank you, Felix, for your question. The reason why we are avoiding extreme volatility stocks is because our strategy usually generates signals which will delay in a day or two. So it is very important to make our strategy have a reaction time for the signals to actually generate. In some high volatility, the price could like surge 50% a day, and which is very undesirable for us. Yes, thank you.
But how do you improve your strategy, okay, in order to capture more high volatility stock?
Sorry, capture more.
How do you improve your strategy, okay, to let more high volatility stock can be traded through your strategy?
I think that our strategy doesn't really intended to trade very high volatility stock because as Ken have stated, we have specifically chose a stock which would have a very good characteristic for our strategy to do. But if you were say to trade some very extreme volatility stocks, I think one of the things we might do is to shorten the time interval such that the signal would be more, our algorithm will be more sensitive to capture the signals. Yeah.
Okay, I see. Thank you.
Hi, I just have one question, very simple. As you mentioned it, about you are using the MACD indicator to identify the potential stock, right? So during the development process, how you identify MACD? Why not others indicators?
Yeah, we have tried several moving average. Because it is kind of intuitive, and we just look around and and we just find MACD. It is kind of good. Yeah, but we tried Karma, the Kaufman's adaptive moving average. We have tried Awesome Oscillator, and etc. And we found that MACD is actually doing quite well. Yeah.
Okay, got it. Thank you. Okay, Andrews.
Thank you. Any other questions from any judges? If no more, the Q&A section of newbies has ended. Judges, please write down your score. And also thank you, newbies. Up to next team is Jacobian from Hong Kong. The team aims to trade with the order book by observing the volume in the transaction with the technical indicator on balance volume, OBV, and the time-sensitive EMA. Jacobian, please unmute yourself and share your screen. And you have 4 minutes to present when you are okay, and you can start. Hello?
Sorry.
Yes, okay.
Yes, my screen. Oh, can you see my screen? Sorry.
Yes, you can see it. You can start when you are okay.
Hello, Gato. Actually, do you mind if I share the screen?
Yeah, okay.
Yep, hello. Is it possible to see the screen right now?
Yes, sure.
All right, awesome.
We can start if you are okay.
All right, so yeah, we're about to start right now. Can I start right now?
Yes, we can start now.
Yeah, okay. So yeah, we are Team Jacobian. Our team background is that Jethro is studying computer science. He's focused on the technology, and I study heavy engineering backgrounds with a minor in finance. And we both worked in several like banks or consulting firms. We've been actually keep applying for participating in those trading institutions, so we have huge interest in the financial market. Those are the investment inspirations. We believe the momentum trading is the key, and the portfolio diversification and order book is what we try to more focus on. So basically, by selecting the stocks, because Korean stocks are really heavily moved by the fundamental, so we try to consider both, blending the both fundamental sides and the quantitative sides, and we focus on what's going to be the industry trends. What I mean by what's going to be the next leading sector, and based on the leading sector, choosing the 2 or 3 potential leading blue chip stocks were our base steps to choose which stocks that we're going to trade. So they have a huge positive cycle. Indicators are what we use is the OBP and the time sequencer like long AMA and short MA, and including the short OBB and long OBB. So why we choose a long short OBB? It's all about the momentum by different periods and order book. Short will like obtain the immediate market sentiments. Long is the retrieve the long-term market consensus. And by catching the momentum, like by analyzing short and long period, how the common techniques like golden cross or dead cross is what we're using. So just to brush up. So our strategy is to try to adopt the momentum trading, especially the pyramiding, buying at the pullback and breakout. And another way we conducted the capital control was to split investments into various parts, and they use the efficient stop loss for. And our main goal is to really compound the profit instead of loss, and wait for the clear signal, save the time, and precise and disciplined risk controls, which we're gonna share you later on, and adaptability to different types of market and cycles. So this is the principles that we've been setting up. How we organize risk management control. So first, we try to focus on diversify to different assets, as we believe the portfolio theory, especially like covariance and modern FPT. Separate the positions with multiple entries. So by setting a stop loss per entry like 10% and stop loss per position per entry 50%, we calculate what's going to be the maximum loss per entry and the volatility. So here's the loss recovery charts, and calculations is basically have done like this. Based on the backtest results, we try to use the Kelly formula, but there was a lot of drawbacks. So rather we choose to use the win ratio and odd ratio, and thus we have the betting size. Using the betting size, we calculated like stop loss using the formula. And the detailed implementation, it's like as what I told you, the value will be 50% per time and stop loss 10%, and the maximum loss per month is 15%. So stop loss update if the position has profit. As I showed you from the before slides, our optimum choice was the 50%. As more visible to continuity of the strategy. Around 10 losses in a month. So that's like 1.5 for a single. And their hiring risk is inevitable, so we choose to take higher possible return. And ideal Sharpe ratio was 0.5186.
30 seconds left.
Yeah. So optimization, we choose to choose a long and short and long OBB period based on the Sharpe ratio. 3 dates, 4 dates. Yeah, so this is the final results. What are the improvements that we could have made? We tried to use the clustering algorithm, machine learning, and also it's going to be better if we use the cover ratio to find what's going to be the optimal spending size and stop loss for each week, and also rebalancing every quarter basis. Thank you. That was all.
Thanks. Now move to the Q&A section. Judges, you may begin now.
Hi, this is Kelvin. You mentioned you're using order book data, but you're just using the technical indicator of like OBV, but OBV is just using the volume. Could you like mention more how you are using the order book data? Thank you.
Okay, thank you, Calvin. Actually, in the beginning, we would like to use the order book data, but we found it's a little bit difficult for obtaining those data in the platform.
Quantitative
So,
way. In a
yes,
platform,
so
there was a lot of like limitation, there's restrictions as well.
yeah, so we decided to use a similar indicator, which is OBV, just measuring the volume, and to simulate the process of observing the order book behavior.
So basically what we try to do is what's the force of every behavior that's been traded by all of people. So we might not know who is exactly, whether the institutions pull the large money, but we definitely can know whether they put equitable amount of the large money inside the order book. We can catch it from it. Sorry, is it well answered?
Okay, thank you.
Any other questions? If no more question, the Q&A section has ended. Judges, please write down your score, and also thank you, JKPN, for your participation. Up to the next is traders tasks from Hong Kong. The team used a cross-sectional momentum strategy to buy the past winners using a generalized risk-adjusted ratio ranking approach. Traders tasks, please unmute yourself and share the screen, and you have 4 minutes to present when you're okay.
So good afternoon. We are Team Traders Start. I'm Weiss, and together with Dexter, we are going to present a unique momentum strategy that gives a return of more than 20%. So let's review a traditional cross-sectional momentum strategy. So the strategy looks at the past performance of the stocks during the formation period and then rank the performance with different factors. For instance, we have return, firm-specific return, Sharpe, conditional Sharpe. Then we buy the winners and then sell the losers. So usually we set the lag period between the formation and the holding period, and this is to avoid short-term reversal. So this strategy is proven to be profitable when stocks are positively autocorrelated, which means that a high return today predicts a high return tomorrow. And stocks that have negative cross-zero correlations and high turnovers also contributes to momentum profits. And we observe that from this competition, the stocks given to us have a high turnover. And this motivated us to use a momentum-based strategy. So many existing momentum ranking strategies are vulnerable to momentum crashes. So based on this insight, we proposed an adaptive risk-adjusted ratio, short for AIAR, and we proposed this ratio, which is an improvement over the Sharpe ratio. So we use sigma to the power of n instead of just sigma. So this enables us to penalize the downside risk more during the bear market. And from our backtest and live trading result, we observe that N is larger during bear markets. So now here's the most important part of this presentation. So how do we select the N? So we feed the N values from 1 to 3. And for each of this N, we select the top ranking stocks based on our AR ratio to form a portfolio. And then we compute the Sharpe of these different portfolios during the formation period using equal weighting. And then we ended up selecting the N, which gives us the largest Sharpe. So our AR ratio is more market adaptive compared to existing methods. So to summarize, a modified cross-sectional momentum strategy involves 3 steps. So first, we rank all the 200 available Korean stocks on Algo based on our modified ratio. And then we buy the top 20% of stocks and then hold them for 1 month, and we trade every month. So those who understand the momentum strategy will know that the P&L based on the momentum strategies will be positively skewed, as can be seen at the right diagram. So which means that when you lose a little, but when you win big. So in fact, from our backtest and live trading result, we have similar observations, and we believe that this strategy will result in a positive skewed return. So during the live paper trading, our strategy results in a period return of 27.26% and 2.38 Sharpe, which we think is a reasonable P&L for a momentum strategy. So lastly, in terms of execution, so I would like to draw 3 points. So first, on capital. So depending on the strength of the momentum signals, so user can adjust the weight of the stocks in the portfolio and hold an offsetting position in cash for hedging purposes. And second, so the two key aspects of whether like a momentum strategy will work depend on volume and volatility, and hence we can optimize our strategy by trading when the market has the most volume. And also, rather than holding the stocks for a static period, in this case 1 month, we can close our positions when the market starts to show signs of reversing. And lastly, so this strategy is a long-only strategy, so we only buy stocks because shorting stocks are more expensive. But we can hedge by shorting futures. Also, like according to our risk appetite, we can also like adjust the leverage accordingly. So to sum up, our strategy is market adaptive, innovative, practical, and also has a great execution potential. So that's the end of our presentation. So we have also enjoyed learning about different ideas from all the previous teams. So any questions? Thank you.
Okay, Q&A section. Judges, you may begin now.
Hi, this is Wallace from CFA Society. Thanks for the team presentation. Traders start, right? Just to carry up 1 point. So this is a buy and hold strategies, and the holding period is 1 month. Am I correct?
Yes.
Yes.
And just follow-up question is, which day would you start to buy, and how do you choose 1 month?
Well, we buy at the first trading day of a month, but of course you can simply buy at any day and then hold for a month, or you can also close when you see the market show sign of reversal.
Okay. So my final question would be on the risk management. I think it is reasonable to say you do some hedging through shorting index. Have you considered shortening the, say, index ETF, and you can do the leverage, and how would be the performance if you just simply shorted the ETF?
Sorry, can you repeat your question?
Because you're pretty much hedging the portfolio, doing you from that angle, yeah, you're hedging your portfolio through shorting the index, right? The other round is you can do a simple long short strategies, and you long the winners and shorten the whole index as a way to hedge, as a way to leverage. So have you tried to consider that alternative as well?
We tried before. We try using 90% of our capital to long of the stocks and then 10% of the capital to short futures, and it can improve the returns.
Okay, hope to hear more good news from you. Thank you. I stop here.
Thank you. Any other judges have any question?
Yeah, this is Calvin. I think your adjusted risk return ratio is quite creative. But have you ever tried using the Sortino ratio, because it is also like having a similar effect on calculating the risk adjusted ratio, but eliminating the downside volatility.
Yeah, I think that is a great suggestion. We will try that in futures. Because for now we will only look at returns, and also returns Sharpe ratio, and also maybe return to the variance. So we only consider this ratios.
Yeah, but I think that's a good suggestion which we can also try to backtest in future.
Yeah.
Okay, great. Thank you.
With the Q&A section for the trader tasks has ended. Judges, you can write down your score. And also thank you trader tasks and the previous 5 teams for the wonderful presentation. Now we will take a short break. And then after the break, we have another presentation.
Una vida definida por el trabajo. Leo. Primer paso. Imposible o invita. Dicen que la suerte es un feliz imprevisto. Pero el trabajo no es suerte. Y la constancia no es imprevisible. Si las cosas buenas les llegan a quienes desean, entonces las grandes hazañas le llegan a quienes entrenan diariamente, que hacen que valga la pena. Poco a poco, acercándose al objetivo, ningún progreso es demasiado pequeño. La persistencia premia. Con trabajo y perseverancia, se hace campeones. Hacer que valga.
BitGet believes incremental improvements are the only secret to success. Creating smarter crypto solutions for everyone. Progress, no matter how small, is valuable. It builds upon itself. Make it count.
Hello everyone, welcome back. Now we will move on to the crypto stream. The next team is All or Nothing from Hong Kong. The team implements a trading strategy based on the moving average convergent divergency MACD indicators. Hello, All or Nothing. Will you please unmute yourself and share the screen? And you can
Yes. Okay.
4 minutes to present if you are okay.
Okay. Next camera. Okay.
No hurry.
Okay. Okay. Can you see the screen?
Yeah, sure. You can start now.
Okay. Good afternoon, everyone. We are Team All or Nothing, a group of students from CUHK Statistics Department. Today, we're going to divide our presentation into 3 parts: market observation, our strategy, and risk appetite. First, For the investor behavior, there are research support that technical indicators can predict the movement, and usually with higher profitability in crypto market. In our preliminary analysis, we conducted the seasonal decomposition to analyze the market cycle, and we try to delve into 1 month duration. We found that there are seasonalities in a year and a month. For example, we identified that it's likely to have an uptrend from February to April. For cryptocurrency, we select Bitcoin as our major trading asset because of its market cap and proportion. Also, we think that cryptocurrency with small market cap is not suitable due to volatility and price manipulation. Besides, we also found that all cryptocurrencies are highly positively correlated with each other. So it's not necessary to develop a multiple crypto portfolio for hedging.
Okay, in this challenge, we use the MACD indicator as our strategy to identify the entry and exit point. Also, it's a good indicator to match our observation we mentioned above. You can see the backtest performance below. Comparing with just strong holding the Bitcoin, our strategy earned more than 800% return. We will conclude our strategy as a low frequency, stable, and profitable strategy. From the data provided, we successfully made 300 trades in 5 years, and we have achieved an impressive risk-reward ratio with a consistent win rate. In the following, we'll show you how we adopt our strategy on trading Bitcoin. For normal MACD strategies, trader open or close the position when the crosses occur. However, it's not really useful due to the limitation of the lagging indicator. Therefore, we modify the indicator by considering the level and trend of the MACD. For example, we'll compare the MACD on T-1 day with the previous 5 days, which can generate a more responsive signal considering a short-term trend. With the modification, the lagging effect is minimized, and the graph shows the difference between our strategy in yellow and the normal version in white. You can see that our setting generates a quicker reaction. Also, with the modification, the losses of trade is under protection, which can cause a smaller loss when the market is fluctuating. Here is one of the downtrend in the Bitcoin market. We can accurately close the position and open the short position automatically, showing the ability of our strategy to capture the downtrend.
So in the third part, we want to offer more options to the risk-averse investors. So we will close all the position whenever the 30-day volatility surpasses the 60-day volatility to mitigate the exposure to significant market fluctuation. So it means that whenever the blue curves is above the black curves, we close our position and no trading is allowed. Our algorithm can only trade when the black curves is above. So does it really work in market? In Bitcoin market, let's see an example. In the 9th of March 2020, the blue curve is above the black curve in the right-hand side. So we close our position at that point. And you can see after that, the price dropped significantly and we successfully avoid huge losses. So here's another example. Basically, the same situation happened again. So it is quite suitable for those who don't want to suffer from large risk. Lastly, we could also combine the MACD and RSI together. We can close our long position in the RSI if the RSI is in the overbought zone and the RSI start to fall to avoid participating in an overheating market. These risk control methods help us effectively monitor the risk. That's the end of our presentation. Thank you.
Thank you. Now is a Q&A section. Judges, you may begin.
Hi, this is Wallace from CFA Society. Thanks all of nothing presentations. First of all, I think there's a slide showing the number of trades. You have number of wins and number of losses. It seems there are more losses than win. Yes.
Yes.
Can you explain why the win ratio is relatively low?
Although our win ratio is relatively low, but we been at a higher return, but we lost at lower loss. So overall, we will earn a return, and yeah, and I think the times of win is relatively not that are not that important in this setting.
Okay. Just one more question is, you did observe interesting pattern about seasonality, and you mentioned like, say, for example, February to April more likely to be an upcycle. How does it factor into your trading pattern? Thank you.
We're trying to capture. We're trying to because we observe this market cycle in Bitcoin market, so we try to use the MACD, which is a trend following indicator. So we're trying to by leveraging the MACD, we capture the downtrend and the uptrend, both downtrend and uptrend, and make a profit from it.
Okay.
Any questions?
From the market trend, you can see a lot of false signal in there. How do you handle such kind of false signals?
Yeah.
Yeah, because the Bitcoin is keep upping and down, and quite sensitive in there.
So we try to, like, as we mentioned it, we try to use MACD, and we will we'll follow the signal, whether there's a golden cross or they're forced to buy or sell, and we will try to compare the T-1 data. That means the trade before, exactly 1 day before a trade happened, and those data before those data that previously collected like 5 days ago, and if there's a upward trend, then we will buy it. If no, then we will just ignore it.
Okay. Yeah. Have you tried to compare with other indicators to try to make it more complete?
So we actually try to add RSI with MACD together to find a great stop loss point, to find a way to close out all our position. So that's our try. So
that's right. Okay, got it.
Okay, thank you. Maybe the Q&A section for All or Nothing has ended. Judges, you can write down your score for the team, and also thank you for your presentation, All or Nothing. Coming up next is Alpha Hunter from Hong Kong. The team strategy is based on momentum trading on cryptocurrency using moving average and adjustment based on volatility. Alpha Hunter, please unmute yourself and share screen, and you have 4 minutes to present, and you can start now.
So good afternoon, everyone. This is Alpha Hunter, and today we are really excited to share our algorithm to all of you. So this is our overview of our presentation. And we'll first introduce our team background. So we are 3 HKU FinTech students. So first we have Travis, who has a lot of internship experience in investment and algo trading, particularly at Capital Group and Volunteer Management. Next, we have Rain, who is also an experienced financial professional who has a lot of internship experience in Toba's family office and liquidity trading desk. And finally, I'm Adrian, and I have a lot of project and competition experience using different types of machine learning algorithms. So both Rain and I have a news-driven algo trading portfolio on US stocks with $100,000 USD investment. So I'll pass the time to Rain to introduce our trading ideas.
So firstly, about our trading ideas. Our trading philosophy is simple. We find values in the volatility in cryptocurrencies, and our strategy captures the momentum of the market with dynamic moving average. So our strategy combines the traditional momentum strategies with our new ideas. We have created a dynamic band around the moving average to reduce the unwanted trades. Our strategy also monitors the volatility of the underlying to adjust for different market conditions. So this is our original submission. After that, we have further enhanced the algorithm. Firstly, we use a dynamic moving average line instead of a static one. This makes the algorithm better at catering to different market situations. You can see from the graph below, our algorithm has successfully found these reference points to help calculate the best moving average line to be used. Our algorithm can also dynamically adjust to its recent profit and loss and learn from the mistakes it's made. So let's pass on to Travis to talk about our performance and risk management.
Right, so moving on to part 3 about our algo's performance. So in our original submission, we are able to achieve a return of 354% and over 0.7 Sharpe ratio based on our backtesting results. And after adopting a dynamic moving average and with an adjusting P&L, we are able to double our returns to 671% and achieved a Sharpe ratio of 0.856. Regarding our live trading results, we have achieved a return of around 14% in only 2 months' time. Apart from achieving a high return, our risk management measures have helped us achieve a high Sharpe ratio by limiting our drawdowns. You can see on the graph in the slides, our strategy has performed exceptionally well in Black Swan events. You can see in all 3 Black Swan events, our strategy has earned massive profits as opposed to a losing value in the underlying assets. Overall, in the last 4 years, our algo has successfully outperformed the underlying. Thank you everyone for joining today, and we welcome any questions.
Thank you. Now is our Q&A section. Judges, you may begin.
Excuse me, I'm Philip from CUHK. So in your trading strategy, you set up with the dynamic moving average. Okay, so that your moving average, how do you what or maybe the methodology, okay, for setting this dynamic, how dynamic it is?
Thank you for your question, Mr. Learn. So our strategy actually uses we calculate the peaks and troughs for like the past 100 days of data. And in that, we will identify whether it is a trend or a range. So in the range, you can typically observe much more peaks and troughs in that period. And in the range, when and in a momentum event where the price of the underlying actually goes up quickly, you typically identify less peaks and troughs. So by using the time period between these peaks and troughs, we actually calculate the moving average time range that we will use. So the moving average typically will be from around like 10 days to more than like 100 days, depending on the time period.
I see. So how about this strategy apply for other crypto? In your example, you use BTC. How about with some more volatile crypto like the Sonia, okay, something like that?
Oh, we actually haven't tested on most of the like more volatile crypto, but we focus on the higher market cap crypto. So we actually tested on the top 10 market capital cryptocurrency, and all of them shows high return. Some of them even go up to like more than 1,000 or 2,000 return in 3 years or 4 years.
Okay, I see. Okay, thank you.
Any other questions?
Yeah, this is Kelvin. I saw your Sharpe ratio in backtesting is below 1, so it means your risk is higher than return. Did you try to find other parameters or other like strategies that could have a Sharpe ratio over 1? Thank you.
Yes, I think like so actually like for the Sharpe ratio, we actually did find some. But because like we also did developments on different platforms, some of the platforms actually returned the Sharpe ratio over 1 and even like over 2. So so we believe like it may be some adjustment due to the data source and also historical data calculations. So we are actually working on this part, but we believe that our strategy actually should have a Sharpe ratio over 1 with more like some parameters tuning, and also more future improvements to it.
Okay, thank you.
Maybe this is the end of the Q&A section. Judges, please write down your score, and also thank you, Alpha Hunter, for your presentation. Next, the ninth team is God of CTA from Hong Kong. The team used a multi-strategy CTA algo based on various crypto factors and models, using Z-score as the main model to trade and implement different weighting between strategies and underlying. Will you please unmute yourself and share the screen? And you have 4 minutes to present if you are ready.
Okay, thank you. So, yeah. Good afternoon, everyone. We are a God of CTA team. So we are mainly fintech students from University of Hong Kong. So I'm Eric, and so our strategy are mainly based on market data, and then also on-chain data, option data, as well as sentiment data in the crypto market. So to do predictions, so we have used multiple models, like we have used 6 or more models to optimize those data, as well as predicting the price changes, as our name is CTA. So we mainly do directional trading. So we are guessing for whether it's a long trend or we should do a short trend. So we have used multiple data, and as well as we have used multiple models in terms of our tuning, and to make our algorithm able to perform in different market conditions, to perform a all-weather strategy. So our backtest result have a Sharpe ratio above 2, so with a Sharpe tenor ratio above 4. So we're able to generate over 100% with a maximum drawdown lower than 32%. So this is a backtest result from 2020 to 2022. But as the Algo Gene platform only can implement a limited amount of strategy, so I've used my local Python environment to do a backtesting for about over 250 strategies, which are able to gain a annualized return of about 99%, as well as have a Sharpe ratio over 3.6 and have a karma ratio about 6.2. So as we are having a very high karma ratio, we believe that we can have a leverage on our strategy. So we have take a 2x leverage on our strategy in terms of real-time trading. So I think for myself and also for my team can set about 30% of the drawdown. So if the drawdown is not higher than 39%, which is 1.2 times our MDD. So if it's not higher than that percentage, I think our team are able to accept this drawdown. Sorry, it should be 30%, so it's 1.3. So we have our real trading algorithm run on Bybit because due to the limitation of the platform, we are unable to run 250 strategies in Algo Gene for live testing, and also I think the performance might be lower than expected. So we have run a real trading result on Bybit, and then we are able to generate over Sharpe ratio about 3, and then total return about 48% over the period, and then have a karma ratio about 2. So there are some details about the real trading result on Bybit. So we believe our algorithm are able to achieve high return in different market conditions, as we are able to achieve like Sharpe ratio above 2 and then also above 3 for my local environment that we are able to generate even in the bear market. And then here is something that I would like to show, which is a proof of our real trading result on Bybit. So this is all our trading result like for the live testing environment, and this is our equity curve. So shown in here. So you have seen that we are able to make real trading, which includes funding fee, closing fee, opening fee, and then we are still able to generate high return over different market conditions. Thank you.
Thanks for the presentation, and now move to the Q&A section. Judges, you may begin now.
Hello, I'm Dok Kian from Contit. Thank you for the presentations. In your presentations, you mentioned that you combined more than 100 trading strategies into to generate a signal. How can you combine such amount of strategy into a single strategy?
I think that for this question, thank you for your question. We have made a database to store our strategy as well as the various parameters as well as also the model, and then we are able to compute in a very quick speed about 3 seconds before generating a trading signal. So all of these trades are run in virtual machines. So these are real trading API, real trading results, which has an API connected to the exchange that we are able to generate. So it is actually in the real trading environment results. Thank you.
Any other questions from any judges?
Excuse me. I'm Philip from CHK. Just a simple question. Okay, in the first page of your slide, okay, you show that one of the factor is the option data. Okay, your option data is a stock option or option on the crypto.
Crypto options. Yeah.
So
we
that's
calculate the strike price. Yeah. So some of them is based on some of them is based on the strike of different options. Yeah.
But how, as I know that for the option on crypto is not very liquid, is it?
Yes,
maybe
yes,
some
yes. But this is
CME.
only This is only the data for training. So we are not trading options as we are doing CTA. So it's more in price directional trading. So it's only the data that we use to train our models. It's only the data that we use to backtest, but it's not we are trading options. If we are trading options, it would be like delta neutral, right? So we are doing CTA. Yeah.
Okay, I see. Thank you.
Yeah, I do have another question from Jacobian team. So I saw that you've been trying to implement the modern portfolio theory into your trading strategies, and I just kind of wonder like how did you do it? Like for example, have you tried to calculated the efficient frontier or based on the covariance for each asset classes? Like how have you done it?
So I want maybe you can clarify more of your question. You want to ask about the model part, or you want to ask about the data part, or how is the optimization part?
Model.
So for model, we have implemented more than 6 models. I can introduce some of the basic model, but some are like very complicated, which I think I can kind of explain in like 1 to 2 sentences. So maybe for the moving average model, like the basic model that we have implemented, we will backtest every parameters about the moving average and then to find the best one to our trade. But we also
I'm talking about modern portfolio theory.
Sorry?
Modern portfolio theory.
Modern portfolio theory?
Yes.
Sorry, I think my slide haven't mentioned model portfolio theory.
All right. Okay.
Yeah.
Okay.
So you want to ask about the model, or you want to ask about how do we generate a signal?
So I just saw in the middle, I just saw how like you use your portfolio theory to managing it. So I thought, like how you approached
Which
it.
page?
Yes.
So
Yes.
it's a modern portfolio theory. So it's just like because we consider different kind of this, like one of our terminology that we've made ourselves. So we just think that we are like more modern in terms of we consider different crypto assets, different trading strategy models. So we do diversification in terms of trading strategy. We do optimization. We rank our strategy according to Sharpe ratio, according to Sharpe ratio, to do different kind of weightings. So we do a high diversification in terms of trading strategy, as we believe some of the strategy can perform well in certain market conditions, some perform well in other market conditions. So when we combine those strategy, we rate it by Sharpe in a initial phrase, and we do diversification by creating a lot of different strategy. So this is the like key factors that what we have implemented in our trading.
I see, because what I know about modern portfolio theory is just not a modernized portfolio theory. It's actually it's academic, theory that has been released past years, and it actually using the efficient frontier to calculate what's going to be each Sharpe ratio for the stocks, and they use try to run the model and try to catch the alpha And from what I hearing, from you, it seems like are different. It's a bit different compared to what I know. So that's why I'm like disappointed on previous part.
Because we do weight our strategy by our Sharpe ratio, and then we do weight our strategy by different kind of ratio that we have calculated. So this is like one of our key factors that we implement when we creating our strategy and able to manage over a lot of over 200 strategies
Have you
in a
calculated
single
the
algo.
covariance? Have you calculated the covariance for each?
Yes. The covariance of each strategy are different. So we do wait. This is the key reason why we are able to perform in different market conditions and achieve a high Sharpe ratio. So the strategy which have a similar covariance, so the strategy will have a similar performance over the past period, or they are having a high correlation. Those strategy we we will like rated in a certain we have give a certain ratio and a certain weighting to those strategy, and for so we tend to weight strategy differently, so according to their covariance and also according to the correlations.
Awesome, thank you.
Yes, because the time is up. Maybe this is the end of the Q&A section. And also thank you for the presentation from God of CTA. Judges, you can write down your score. And now we move to the next team is OCX from Hong Kong. The team used a momentum trading strategy with Bollinger Bands, capitalizing on short-term price movements. OCX, please unmute yourself and share your screen. And you have 4 minutes to present, and you can start now.
Yeah, can you see the screen?
Yes, you can. Yes, you can see it. You can start.
Thank you. Good afternoon, judges and everyone. We are Team OCX. Here's the brief information about our team. We are from the Hong Kong University of Science and Technology in the field of engineering and business background. We are glad to be here as the finalists in this challenge, and we are delighted to have the opportunity to present our strategy. I'm Darwin Kijaki, the main presenter of today. In this Algo challenge, we selected Solana as our main cryptocurrency. First, Solana is currently the third largest market cap behind Bitcoin and Ethereum, excluding the stablecoin. And it has a relatively independent trend with the crypto market. From the correlational graph, you can see that the Solana has a weaker relationship with both BTC and ETH. Hence, in order to outperform the market, we use Solana as our only symbols in trading. Moving on to our trading strategy, momentum trading is our main objective. We believe that in crypto market, trends are more likely to persist in a short period of time due to the market noise and the volatility of cryptocurrency. Therefore, we buy the assets if it has a strong positive price momentum, and vice versa. We utilize Bollinger Bands to adapt the momentum trading. Unlike the traditional one, we open a long position when the close price is above the upper band, and open a short position when it is below the lower band. We close the position when the close price crosses the middle band. To find the best parameter of our trading strategy, we optimize our look-back period and standard deviation by hyperparameter tuning. Also, we assume there is 6 basis points for the transaction cost, including the transaction fee of the perpetual, potential slippage, and funding fee. And we open our position at open, close at close. In the optimization process, we aim to find the consistency in both training and testing dataset to avoid the overfitting. And then we search for the highest Sharpe ratio. From the heat map, you can notice that the optimal zone for the both set is within like 80 to 150 periods, 0.6 to 1 standard deviation. So in our strategy, we use 110 period and 1 standard deviation as our best parameter. So let's take a closer look to our strategy performance. We use buy and hold as our benchmark in evaluating the back testing performance. The red curve is the benchmark and our strategy is the blue one. You can see that our strategy did not volatile compared to the market, and we can make significant profit when there is a clear price momentum. In the live market performance, the annual Sharpe ratio is 2.55 with a win rate of around 59%. It's regarded as a good strategy in the industrial standard and is workable in the market. So that's all for our presentation, and thank you for your listening. And welcome the question.
Thank you. Any judges have the question for the team OCX?
Hi, OCX team. Thanks for presentations. This is Wallace from CFA Society. Quick question on Bollinger Band. Okay, I think it's fine that you use whatever kind of technical indicator, but since this is pretty much an underlying formula is standard deviations, so have you tried to understand how's the performance of your strategies if you change the parameters of your Bollinger Band, which is not the normal one, which normally is 2 standard deviations, right? And how would that performance will change if you have been varying your sort of a formula, and have you tried to optimize it?
Thank you, Wallace. Thank you for your question. So maybe we can look back to the page with the heat map. So in the heat map, we try to optimize the standard deviation. That means we take how many standard deviation above or below the moving average, which is the middle band. So here we optimize the standard deviation and the look back period in this heat map. So we try to look for the consistency in our training set and in our test set. So basically, we will not only just pick the highest Sharpe ratio, but we try to look at the area that with consistent and good Sharpe ratio, so that we choose that area for our parameter. So so you can take a look at the graph. So maybe some of the when we change our standard deviation, that may be some of the area that we will perform badly. You can take a look at the top right corner. There is some Sharpe ratio with only 0.4 to 0.6, something like that. Hope this answers your questions. Thank you.
And how would you explain why this in some cases that you didn't perform that well if you did not choose the optimal range?
Yeah, let me answer your question. Thank you for your question first. And I think for our momentum strategy, we are looking for the a longer period and more not fluctuated standard deviation. So basically, when we look training this strategy, we are looking for a more consistent period and the standard deviation. And you can see that we could use 110 as our period. So basically, it would be a longer period compared to the normal one. So this strategy is highly possible in different currency too.
Okay, thank you.
Any judges have other questions?
Yes, this is Calvin. You mentioned you used machine learning on page 4. Could you explain more? Thank you.
Yeah, thank you for your question. So for the machine learning part, where we are just using a higher parameter tuning method of the machine learning model. So basically, he's learning on how the parameters work. So yeah, this is all about our ML part.
So you're not using a deep learning model. You're not using any ML model.
Yeah, we are not using any deep network or something like that. Yeah.
Oh, okay, thank you.
Okay, maybe this is the end of the Q&A section for OCX judges. Please write down your score. And also thank you for your presentation, OCX. Now move to the next is the 11th team is Vampire Girl from Hong Kong. The team strategy is based on mini bear and bull markets and machine learning on decomposed signals. Vampire Girl, please unmute yourself and share the screen. And you have 4 minutes to present when you are ready.
Okay, any sound?
Yeah, we can hear.
So I start. So our team is Vampire Girl. Actually, it's just me. I'm Mike Choi, and I'm currently in HKBU. Okay. So move to the algorithm. So this algorithm is inspired by the Turtle Traders. So in case you don't know, So the turtle traders is a group of trend following traders, but they have been around for many years. So my take on this is I want to modernize their system because their system is using like mechanical systems, namely the breakout strategies. So I kind of don't want to use the traditional technical and indicators. So my take on this is I want to use machine learning to modernize this whole practice. So first step of my approach is to the labeling. So first I want to label 3 states. So one state is trend up, trend down, and then no trend. These are the 3 states. So this state I think is very useful information, but the problem is we can only identify these states in hindsight. We can only know what state are we in after the state ends. So my first step is use the Bry-Botchan algorithm to label the price time series into the free states. So Bry-Botchan actually is using the phase. So by specify how long each bull run, bear run will be, and you actually obtain this labeled time series. Okay, so the next step is to learn the current state. So one feature I think is very good, give very promising results is, you see this is the original time series, and I basically use bandpass to break down this univariate time series into many time series. And then I take a cross section, and then I put it into a support vector machine, and then I map this multivariate time series to the labels. And then I build a model that can predict the current state. So this is the trading logic. So I have a breakout at the beginning to trigger the trades. And then if this breakout direction agrees with my predicted states, and then I make a long trade or short trade. So if the breakout is of the same direction with the predicted state, I make a trade. So this is basically my logic. So I am fully invested between BTC and ETH. Okay, so this is the live test result. And I think it's not very good because I actually make a lot of debugging in January. So, but after I fix it, I think it's doing pretty well in February. So my biggest change is that in the beginning, actually, I don't want to use any technical indicators. So I don't use the breakout as a trigger. But after I add the breakout, I think the strategy is actually working pretty good. Okay. So the next step of my development maybe because for the development stake. So I'm using very simple technologies. But if I want to improve this algorithm, maybe I will move to more advanced technology. So instead of a support vector machine, I will use maybe LSTM. So I think this is pretty much my algorithm.
Thank you. Now move to the Q&A section. Judges, you may begin now. Any judges have any question? With no more question, maybe we move to the next part. And judges, you can write down your score for Vampire Girl. And also thank you for your presentation. Now, the 12th team is again Jacobian from Hong Kong. The team aims to trade with the order book by observing the volume in the transaction with the technical indicator on balance volume, OBV, and the time-sensitive EMA. Jacobian, please unmute yourself and share screen. You have 4 minutes to present if you are ready.
So awesome, we are ready.
Yes, okay, you can start now.
So we're Team Jacobia. We're back again. Glad to be back again. So yeah, as I'll be really going real quick. So we're Team Chatho and Jimmy. We both study engineering and we've been working in the trading solutions for banks, regards to the risk and trading. So our inspiration is coming from the momentums. We believe there's a huge force will drive the large returns. Next is the portfolio diversifications. So by calculating what's going to be the alpha by the running the efficient frontier, we can catch how to prevent the maximum drawdowns, which is the risk. Next one is to calculate alpha from the order book. So we try to really catch the spontaneous actions, what's happening, what's going on in the market. So these are the cryptocurrencies that we choose. We choose based on the many backtesting results for other cryptocurrencies and to see what was their best combinations. What I mean by combination is the backend to see what maximize the profit for based on the portfolio theory. So these are the 4 key terms we consider: high volatility, strong growth, positive sentiments to the market, and regulatory environments. So next, those indicators we used OBB and long MA, short MA, and short OBB, long OBB to catch the force. So why long OBB? Basically is to find the immediate and the long-term force to see how to really analyze by using the golden cross and that cross, and yeah. And there's a lot of questions will be arise, like actually, really going in depth, like how people using momentums. But momentum is not just only forward, right? Because it's a consistent directions and leveraging more profit. So we've been trying to use analyzing different bar charts by certain periods to see when we should keep investing in it. So our target is to not only maximize the profit, but also to prevent the risk if we got a wrong signals. We don't want to keep investing in the same signal, wrong signal, right? So we will be reflecting every bar, every periods to see whether we are on the right directions. Second is the capital control. So split the investments in the various parts and stop loss positions and pullback breakout. It's a principles we have set it. So overall, just to tell you, compound the profit is a key, and wait for the clear signals and precise disciplined risk controls, adaptability to different types of the market and cycles as the key to prevent the risk. So more in depth to the risk, we try to diversify the risk to different assets, and based on the positions that we multiple entries. So we calculated the stop per entries and position per entry and done some math, and maximum loss per entry and volatility are set it to prevent the maximum huge loss. And we've been showing like optimizing based on the percentage loss and how it's going to be the ending balance after the loss and what's going to be the gain after the recover from the loss. So we try to implement the Cali formula into our trading strategies, but instead, because of the lack of the platform, we use the win ratio and odd ratio and trying to optimize what's going to optimize bet size and also the stop loss and what's going to be the maximum loss per time. So here was the calculations as we've done before. So
30 seconds left.
Yeah, after that's 15% is more reasonable than the continuity, around 10 losses in a month. So this is the solvency we have set it. And by optimizing the long and short OBB period based on the Sharpe ratio, the short was 3 days and long was 4 days. So this was our final results. And as you can see, we've been trying really hard to prevent the maximum drawdowns and have a consistent growth. So what are the improvements that we could have made? We were actually working on the clustering algorithm using the machine learning. We don't use any historical data just to see what's going to be the large force that's really into the market. And also we are using the cover ratio to see what are the optimal betting size and the stop loss for each equity, for the cryptocurrencies. Yeah. Thank you.
Thank you. And now move to the Q&A section. Judges, you may begin.
Excuse me, I'm Philip from CSK. So it seems that your strategy for the crypto is much similar to the Korea stock. Okay, can you say something about what is the major difference between these two trading strategies?
So the major difference is gonna be the fundamental, like choosing the right stock or choosing the right crypto. Those fundamental approach will be different, and also, like we haven't introduced you, but the ratio that we've been calculating, for example, gamma ratio or the covariance for each stocks or the average, like how we diversify the cryptos and the equities, those were different because they had a different Sharpe ratios or maximum drawdowns or different efficient frontier. So the math was different. But overall approach was the same because we still believe that market is always running by the sentiments and the force of the players. Yes.
Okay, okay. Thank you.
Yeah, thank you for the question.
Any other questions?
Sorry, this is Wallace from CFA Society. Quickly, just so the backbone algorithm between career equities and crypto are pretty much the same.
Sorry.
The key logic and algorithm between
current
and the same.
Similar. Yeah, but I mean the approach is similar because our investment philosophy is same, is equal. Our investment philosophy.
That means you can replicate the same algorithm to all the other equities or gold or whatever that you believe.
That's what we believe. And that's what we're trying to actually create by using the algorithm, especially focus on the clustering model and optimization, which is based on the gamma ratio. Yes. Thank you.
Any other questions? If no more, maybe this is the end of the Q&A section for Jacobian. Judges, please write down your score, and also thank you for all the presentations for all the teams for the wonderful presentations today. And that sum up all the presentations for the day. Thank you to all the teams. Judges, will you please use this time to write your final score and votes for each team? Let's take a short break and we will move on our next part of the event later.
Una vida definida por el trabajo. Leo. Primer paso. Imposible o invita. Dicen que la suerte es un feliz imprevisto. Pero el trabajo no es suerte. Y la constancia no es imprevisible. Si las cosas buenas les llegan a quienes desean, entonces las grandes hazañas le llegan a quienes entrenan diariamente, que hacen que valga la pena. Poco a poco, acercándose al objetivo, ningún progreso es demasiado pequeño. La persistencia premia. Con trabajo y perseverancia, se hace campeones. Hacer que vaya. BitGet believes incremental improvements are the only secret to success. Creating smarter crypto solutions for everyone. Progress, no matter how small, is valuable. It builds upon itself. Make it count.
邁向10年發展 ，Topus 由最初照顧 Single Family Office（SFO） 到今日嘅 Multi Family Office（MFO），一直以嚟，我哋都為家族辦公室客戶、高淨值嘅私人同埋機構客戶提供全方位嘅財富管理、風險管理以及家族傳承等等嘅服務，致力保障家族財富，同時亦做到財富增值同財富傳承。
Topus 由創立到而家嘅定位一直非常清晰。我哋係以家族資產嘅長期利益同埋發展作為終極使命。Topus 嘅家辦服務團隊包括律師、會計師、投資經理同埋升學顧問，提供稅務規劃、家族信託、遺產規劃、家庭成員嘅保障以及子女升學嘅發展。
Topus 嘅成功主要基於兩大元素。第一，我哋根據客戶嘅需求，提供量身訂造嘅投資組合。投資管理服務涉獵1級同2級市場投資，包括私募股權、固定收益、對沖基金、環球證券同埋期貨等嘅領域。
Topus 作為香港家族辦公室嘅前線，我哋好榮幸成為 Family Office Association Hong Kong（FOAHK） 嘅聯合創始委員。
Hello everyone, welcome back. And ladies and gentlemen, we are now announced the winners of our Algo Trading Challenge 23-24. There will be 3 award categories: Best Return, Best Sharpe, and Best Strategy Design, and first, second, and third place in each category. Teams can be winners in more than one category. First, we will start with the Korean equities stream. Now, let's show the finalists out of sample backtest results. Trader Tug start shooting up. Hold on. Lewis just crossed over and exited 10. In the meantime, another team rose up. Who's that? It's Alpha Omega Capital. My God, MSL suddenly took over, while newbies remain the top contender. Wait, all teams are dropping off and Sigma Gold is climbing up, despite the resistance. All three groups, newbies, Trader Darks, and Sigma Gold are going neck to neck. It's almost the end of the out of sample pack test. Trader Talks and Sigma Gold are very close to each other. Alright, the results come out. The out of sample period is from 1st of December 2023 to 31st of January 2024. And the best Sharpe reward. Third place goes to newbies from Hong Kong. The team used a simple strategy based on the observation assumption that an MACD histogram peak could represent the actual price peak with delay in 1 to 2 unit time. The Sharpe ratio on the out of sample data is 0.8905. And the second place goes to Sigma Gold from Hong Kong. The team used a grid trading strategy which generates buy and sell single in regular intervals above and below the current price. Profit will be generated when the price moves up and down frequently. The Sharpe ratio on the out of sample data is 0.8908. The first place of best Sharpes goes to Trader Stocks from Hong Kong. The team used a cross-sectional momentum strategy to buy the past winners using a generalized risk-adjusted ratio ranking approach. The Sharpe ratio on the out of sample data is 1.15. Congratulations. Alright, now we are going to present the Best Return Award. Our finalists have paper traded their algorithms in a live market environment for the period of 1st of January to 29th of February. It is a 2-month live paper trading. Wow, Trader Tide is going up. Alpha Omega Capital just dropped off and it rebounds. Alpha Omega looks like it's taking the lead right now. How about the other teams? Newbies, rise up. Can it overtake the lead? Alright, the results comes out. Now, let's move to the best return reward. The third place goes to Trader Stocks from Hong Kong. The team used a cross-sectional momentum strategy to buy the past winners using a generalized risk-adjusted ratio ranking approach. The return on the out of sample data is 0.74%. And then the second place goes to newbies from Hong Kong. The team used a simple strategy based on the observation assumption that an MACD histogram peak could represent the actual price peak with delay in 1 to 2 unit time. The return on the out of sample data is 11.2%. Now, the best return, the first goes to Alpha Omega Capital from Indonesia. The team leveraged KOSPI high frequency data and utilized the mean reverting tendency of the stock pair spread to exploit the short-term deviation of the pair to secure profit. The return on the out of sample data is 26.1%. Congratulations. And also, now we move to the best strategy design. Thank you. And coming up next, we will have the prize presentation of the best strategy design of Algo Trading Challenge 2023-24. The best strategy design, third place goes to Sigma Go. Congratulations. And then the second place goes to Alpha Omega Capital. And then the best strategy design, the first one is Trader Stars. Congratulations and very congratulations to the team. Ladies and gentlemen, we now move on to the crypto stream. There will be 3 awards again, just like the equity stream. Best return, best Sharpe, and best strategy design. And first and second and third place in each category. Teams can be winners in more than one category. Now, let's show the finalists out of sample backtest results. All the teams spin off, OCX and Alpha Hunter take the lead. They almost reach 10. OCX drop off and all the teams are emergent. Alpha Hunter is dropping off. In the meantime, another team rose up. Who's that? It's all or nothing. Oh my god. Jacobian suddenly took over and took to the top position. It's almost the end of the out of sample backtesting. Jacobian and All or Nothing are very close to each other. Who can be the final winners? Alright, the results is ready to come out. The out of sample period is from 1st of January 2023 to 31st December 2023. Now, the best Sharpe reward. The third place goes to Vampire Girl from Hong Kong. The team's strategy is based on mini bear and bull markets and machine learning on decomposed signals. The Sharpe ratio on the out of sample data is 0. The second place goes to All or Nothing from Hong Kong. The team's strategy is based on momentum trading on cryptocurrency, using moving average and adjustment based on volatility. The Sharpe ratio on the out of sample data is 0.74. And the first place goes to Jacobian from Hong Kong. The team aims to trade with the order book by observing the volume in the transaction with the technical indicator on balance volume OBV and the time-sensitive EMA. The Sharpe ratio on the out of sample data is 0.75. Alright, we are now going to present the Best Return Award. Our finalists have paper trade their algorithms in a live market environment for the period of 1st of January to 28th of February. Now, let's see how the finalists Algo performed in the 2 past months. Let's see the live paper trading. First, Empire Group drops off. The rest of the teams start small movements. Alpha Hunter is now taking the lead. And he's dropping off, and Vampire Girl is coming back up. Whoa, Jacobian is taking the lead, but not for long. Vampire Girl is back up and past Jacobian. Jacobian starts dropping off. God of CTA and Alpha Hunter are now going neck to neck. Alright, the results come out. Let's move to the best return reward. The third place goes to Vampire Girl from Hong Kong. The team strategy is based on mini bear and bull markets and machine learning on decomposed signal. The return on the out of sample data is 7.9%. The second place goes to Alpha Hunter from Hong Kong. The team strategy is based on momentum trading on cryptocurrency, using moving average and adjustment based on volatility. The return of the out of sample data is 14%. And the first place goes to Jacobian from Hong Kong. The team aims to trade with the order book by observing the volume in the transaction with the technical indicator on balance volume, OBV, and the time-sensitive EMA. The return on the out of sample data is 25.1%. And thank you. Coming up next, we will have the prize presentation of the best strategy design of the Algo Trading Challenge 2023-24 for the crypto stream. The best strategy design, the third place goes to OCX. Congratulations. And then the second runner-up goes to All or Nothing. Congratulations. And then the best strategy design, the first one, praise goes to God of CTA. Congratulations. We have now come to the end of the competition. On behalf of the organizing committees, we would like to thank you for joining us this afternoon. We would like to express our sincere thanks to all the judges, sponsors, and finalists. Your support has made this Algo Trading Challenge success. Congratulations again to all the winning teams. We will contact the winning teams very soon. Thank you very much and looking forward to seeing you again next year.